Okay, so we begin with the introduction to just candlesticks. The traditional way of trading is for traders to look for certain things in the market. They look for either the trend, they look for the levels, and the different type of levels, which we are also going to be talking about. Then they now use candlestick as a confirmation. But that is not the right way to trade, because all of those things came in after the candlestick existence. Candlestick is the first thing that the Japanese started using to trade financial market. As a matter of fact, they were using it to trade rice. And the man that invented it, if you read your book very well, there's a book that is called the Candlestick Bible. Okay, you can read that book and you will understand what I'm trying to talk about. The man was trading the candlestick, using it to trade rice in the 18th century, and it was like a secret. He became one of the richest at that period of time as a trader. According to history, he worth much more than $18 billion by trading candlesticks. Then, fortunately enough, during the 1980s, that was when the secret began to leak into the Western world. I'm giving you the introduction so that you will understand that candlestick is not something that I am trying to reinvent. It is something that has been in existence and I am trying to bring it back because of study. So when the thing was leaked to the Western world, especially the Americans, they didn't get all the informations. So what they now began to look out for was the candlestick patterns. And many of you know very well that patterns are being traded today, and because that's a common one, the patterns where you have two candle pattern like inside bar, two candle patterns like engulfing candles, then you have three candles patterns like morning star and evening stars and all of that. Then they have some individual singular patterns and singular candles like doji, like hammer candlesticks, and like spinning tops. So those are the things that they knew, and they began to use them to trade, and they were becoming very successful. But the man that invented candlesticks wasn't trading ordinary patterns. Even though he knew about the patterns, he was more particular about what will happen after each candle. He focuses on knowing what happens after the next candle. As a matter of fact, it was that candlestick he used. He invented it for trading. So candlesticks are not just pictures, they are not just shapes, they are actual graphic representation of the activities in the market. When you see a candlestick, it describes to you what is happening in the market. It describes the volume. It describes the number of people trading. It describes what is going on. Okay, so we are going to be focusing on candlesticks. Then we are now going to be using our support and resistance, our trend lines. We are going to be using all of those things to confirm the candlesticks. We are not going to be doing the other way around, where they will use the support and resistance, the trend lines, then they will now be using candlestick to confirm. No, we will focus on candlesticks. That is why it is called just candlesticks. Okay, so in doing all of that, we'll be focusing on studying the candlesticks, the opening of the candle, the close of the candle, the wicks of the candle. All of these things, they have significance, they have meanings, and if you understand them very well, it will help you in your trading. Okay, so in this introduction, I'm trying to introduce to you that there is the reason why we are focusing on candlesticks, not just something we are bringing in. Okay, so let's begin right now. Now, when you look at candlesticks, let's look at each of these candlesticks. When you see this candle, you see these candlesticks, it means something. It tells you, ordinarily, you know, this one talks about a strong candle. Okay, why do we call it a strong candle? I don't need to talk about some of the basics because I'm sure we're aware of that. Why is it a strong candle? It's a strong candle because of the body of the candle. The body of the candle is very strong. Now you see the next candle too is very strong. So you see the body of this candle very strong. What that means to you in the market is that when you see the body of a candle very strong, it means there are traders in the market. It means there is momentum in the market. It means people are interested in buying. And so therefore, it can also mean that the market will continue to go in that direction unless and except there is a level. If there is a level, we are not going to be considering that level. But what we are going to be focusing on first and foremost is candlestick. If you notice that my trades are usually that I look out for monthly candlesticks. Okay, let's look at the monthly candlesticks. And when you see the monthly candlesticks, it tells you what is going on. Let's see this one. Let's take out some of these lines. Okay. So the size of the candlestick tells you what is going on. Okay, like I said. Now, quickly, let me also let you know something about candlesticks. Candlestick is actually very interesting because every candle in the market, they move from level to level. Candles don't just move, they move from level to level. That is what people have understudied and realized that there is a level. So they draw their levels. But one of the things they don't understand is that candlestick, when he gets to a level, there are three things the candle can do at the level. Candle can decide to break the level. Candle can decide to respect the level and retrace back. And candle also can decide to consolidate at the level. So that is why in my analysis, you hear me say, when I open my chart, I am looking out for something first. I'm looking out for where is the candle coming from? Where is the candle now? And where is the candle going? This three concept is very, very powerful. Knowing where the candle is coming from, knowing where the candle is going, because it is a journey, is moving from one level to another. So, but you need to understand also the movement. You don't just draw the lines and say, okay, the candle is moving from here to here. That is why in candlesticks, we don't just trade levels. We don't just trade levels. We don't just put in pending orders. Because candlesticks, that is where there can be some challenges. For instance, now, let's quickly look at something here. This is a level. This is a level. Okay? This is a level. This place is a level. Now, you see, like the candle came like this, it went up. So you might think that the candle might continue to go down and turn at this level. That is a possibility. That is a possibility. But one of the things that many people are not aware of that I'm going to be teaching you and guiding you in this class is the fact that when the candle gets to a level, the candle could break that level. So if you put a pending order here that you want to sell, you might realize that the candle might not respect it and break it and take out your stop loss. It is also possible that the candle might respect it and come down because this is a level. It is also possible that the candle might consolidate here for a while before either moving up or coming down. So these are the three things that happens. But right now, we are going to be looking at these candles, because how do we know, or is it possible to know or to have an idea like 60 to 70% know that the candle might reverse, or the candle might break, or the candle might consolidate? The answer is yes. The answer is yes. And so we are going to be dealing with that. That is why we don't put pending orders. In our trading, we don't put pending orders. We need to watch the behavior of the candles. We need to be able to look at it that the way this market is moving towards this level, the chances of breaking this level is there. Or the chances of this market turning back, we can see. So we are going to be dealing with all of that. But the point is, in this introductory class, is that I want you to understand that each candle means something. Each candle means something. They don't just represent, they mean something. It means the activities in the market, and the size of the candle matters. The candle can be a strong candle, and the candle can be a weak candle. Okay? It could be a strong candle, it could be a weak candle. There is also a part of a candle we call indecision candle. We're going to be dealing with all of that. So how do you know that a candle is strong? And how do you know that a candle is weak? Now, it's a very simple thing. It is some of this foundational knowledge that many of us are already aware of. We know that the candle is strong by looking at the body of the candle. The body of the candle. How big is the body? Now, when you are talking about the body of the candle, you are going to be looking at, you are not only comparing the candle with the previous candle. You are looking at the body as alone. What do I mean by that? You are looking at, for instance, look at this candle. This green candle is a strong candle, but look at the other candle by the side too. It is also strong candle. Now, why do I say this is strong and this is also strong? Because in telling the strength of a candle, you compare the body of the candle with the wick of the candle. The strength of the candle is known by its body compared to its wicks. So when you look at this candle, you see the wick below it and you see the wick above it. So when you look at the body, which is from here to here, it is bigger than the wicks at the top and the wick below. So in that case, you say the candle is strong. And anywhere you see a strong candle, it tells you that there is a momentum in the market. People are interested in that market. And that can give you suggestions that the probability of the market continuing is there. Remember, I said there is a caveat. That means provided we are not at a level. Provided we are not at a level. Now, also, we can also compare the strength of a candle with the previous candle. I'll give you an example to that. Let's look for a very good example. Let's look for a very good example. Now, look at the candle here. Look at this candle. It's very strong. This is weak. This is also weak. But if you compare the last candle with this previous candle, this is completely weak candle. So in a situation where you see that the candles are coming this way and you're seeing the last one weak, what does that tell you? It's also telling you that there is a weakness in the market, meaning maybe 100 people were buying before, but the number of people buying now, they have reduced. So, meaning people that are going to be selling are coming into the market. That's what I'm saying to you. You don't look at the candles and just think that they are shapes. They are not just shapes. They are graphic representation of the activities in the market. So you need to know that. Now, let's look at something here also. Look at this candle. It's strong. Look at this other candle. It's strong. But what do you see after this candle? You see a market come down. What does that mean? Remember I said something to you that the strength of a candle. Now, after this candle very strong now, the probability of the market continue is there. So it continue, but it goes to a level here. And so you see this one. Just candlesticks. Because it got to a level. Now, what if you don't pay attention to those things now? You might think because the candle gets to this level now, or you might even ignore this one and say, oh, this candle is strong and this one is stronger, so the next candle might continue to go up and you might lose. So the first thing you do is to look out for the candles. Don't forget, I want it to sink into your mind. Look out for candles first. Understand the anatomy of candles. Understand the behavior of the candles. Then you begin to use other instruments, other factors to confirm the candles. Don't use the other way around where they look for all, they use indicators and they use trend lines, support and resistance, then they now use candle to confirm. No, the candlestick, I repeat, the candlestick is the king, is the king, is the leader. Every other thing follows. So when you open your chart, the first thing you look out for is the candlesticks. Try to first and foremost understand the candlesticks. Understand what in the candlesticks. Understand where the candle is coming from. We're going to talk about that. Understand where the candle is now and understand where the candle is going. So you open your chart. It's candle you first of all look out for. You look out for the candles. Where is it coming from? And what does that mean where it's coming from? That means you are going to look at a level. You look at the whole picture of the market and see where did the candle move from. Then you look at it. The way this candle is moving, is it moving with momentum? Is it moving with energy? Is it moving with strength? And as it's moving, where is this candle is now and where is it likely going to get to? Because, like I said from beginning, candlesticks move from level to level. They move from level to level. Okay? I hope you are getting the point I'm trying to bring across to you right now. So pay attention to that. We're going to be doing more of that. We will pick each of these candlesticks. We will dissect them. We will look out for them. We will understand them. Then we will now use this other instrument. How we are going to use support and resistance with candlesticks. How we are going to use trend line with candlesticks. If you want to use indicator, you use indicator with candlesticks. But the attention, the focus is just candlesticks. Just candlesticks. That is our goal. That is our target. Because that is the king of the market. And as a matter of fact, it was the candlestick that was invented to trade the financial market. Starting with rice. Okay? So every other thing came in when the understanding of candlesticks was not very clear to people. So people started creating all kinds of strategies, started creating all kinds of things, but they didn't go to the root. They didn't study and go to the origin and say, okay, how did this thing happen? For instance, now, every candle that you mention, for instance, you say, okay, Marubuzu. Marubuzu candle, where does the name Marubuzu come from? It's a language in Japanese. It means something in Japan. Doji, it means something in Japan. So that's why they call it Japanese candle, because they founded it. So there's a lot we're going to be talking about. In the next class, I'm going to be picking candlesticks and talk about them, the body, the opening, the close, the wicks, what they mean. When you see them, you'll be able to quickly interpret what it means. That's what we're going to be doing. So I'm sure that by the time we move, you'll begin to understand, and at the same time begin to see the importance of candlesticks, and you also begin to realize why losses in so many cases. So this is introduction to candlestick, introduction to just candlesticks. Okay, that is it. So welcome you, and let's keep going. Then you are going to see, and you will never regret it. You will be grateful for the class. Thank you very much, and God bless you.